Hi there, very good morning. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. The next 1 hour will take you through all the global and domestic cues that you need to watch out for and also tell you about the stocks that you need to keep on your radar today. But before that, let's get started with an eye on the globe. And Srishti, what a day on the Wall Street yet again. It highlighted a split in the market performance with technology stocks. They were lagging while value-oriented sectors like healthcare, they led the gains yesterday. The rotation into defensive and cyclical names that brought some relief to investors hoping for a broader market rally, but it also reflected growing caution towards high-risk tech assets. Now, if you talk about indices, the Dow Jones Industrial Average that climbed to a record close of 48,000 yesterday, making its best week since late June. The S&P 500, on the other hand, slightly edged higher, extending its winning streak to a fourth consecutive session, whereas the Nasdaq Composite, that ended in the negative territory as large-cap tech names, they retreated. Now, market sentiment, that was buoyed by optimism that the historic 6-week U.S. government shutdown could be nearing an end. Now, market majority leader Steve Scally said that the final vote on the compromise funding bill could take place yesterday before the market, after the market closed, and that it is being hoped for a resolution that it would restore access to key economic data. Now, remember that analysts are noting that the market has rebounded from the April lows, and it has been a broad-based rally that we have seen. The broad-based recovery is what we have seen on the Wall Street. Now, while the White House is warned that the shutdown may reduce fourth quarter GDP growth by about 2 percentage points, most of the economists are expecting an overall limited impact to remain. So yes, that's about the Wall Street. Yet again, mixed moves is what we saw on Wall Street yesterday. But Srishti, how are things on the crude front?
Quite exciting, Kanishka, because the fact that we have seen crude falling almost 3% just yesterday. It was seen to be hitting lower levels when it comes to the Brent oil, as well as the major commentary coming in from OPEC as they revises the outlook to show the supply surplus. When just let's tell you what OPEC has actually gone ahead and said, because OPEC now expects the world oil market to face a small surplus in 2026, marking the sharp shift from the earlier deficit forecast. Now, the group's latest report shows the OPEC Plus output to 43.02 million barrels per day in October, with demand next year projected just slightly lower. The surplus of about 20,000 barrels daily comes as OPEC Plus and other products ramp up supply. Now, meanwhile, the IAE forecast a far larger glut of around 4 million barrels per day, highlighting a widening divide in the global oil outlooks.
All right, so that's about Wall Street and how the oil market is faring. But let's also get you some global stories that we're tracking this morning. First up, the U.S. House has inched closer to ending the nation's longest ever government shutdown, now stretching to 43 days. Now, lawmakers voted 213 to 209 to advance a funding package, restoring food aid, federal paychecks, and air traffic operations. Now, Republicans, backed by President Donald Trump, they're largely united behind the bill, whereas Democrats, they opposed it over missing healthcare subsidies. Now, this deal extends funding through January 30, but tensions remain high after weeks of political deadlock and public frustration. Next up, the House of Representatives has reached the threshold to force a vote on releasing the long-sealed Jeffrey Epstein files. Now, Arizona Democrat Representative Grijwala has provided the crucial 218th signature after being sworn in, triggering next week's vote announced by Speaker Mike Johnson. Meanwhile, Representative Boebert was reportedly summoned to the White House amid reports that the Trump administration is seeking to delay the release. Democrats, they've also unveiled over 20,000 Epstein documents, including emails in which he referenced Trump's alleged knowledge of his activities. Moving on, Boston Fed President Susan Collins signaled that she is not ready to back more interest rate cuts going forward, warning that inflation remains too high and key data gaps from the government shutdown cloud the economic picture. Collins, who's a voting FOMC member, said that the policy should stay steady for some time. That's what she has quoted. This is to balance risks. Now, her hawkish tone contrasts with the market hopes for a December rate cut, which highlights the internal Fed division as officials weigh inflation persistence against labor market softening.
Atlanta Fed President Raphael Bostic announced he will retire in February 2026, marking the second hawkish Fed exit this year amid Trump's push for more control over the central bank. Now, Bostic, known for his focus on economic equity, faced past scrutiny over trading disclosures, and now his departure comes as Trump seeks to reshape the Fed board and replace the Fed's Jerome Powell next year. Now, Bostic recently backed holding rates steady, warning that the inflation risk remains too high for deeper cuts. And Oaktree Capital's Howard Marks warned the recent credit turmoil reflects growing carelessness and complacency amongst the leaders during the booming markets. Now, citing the collapse of the First Brands market, Marks said that the defaults are natural correction, not a systematic crisis. Now, he blamed overconfidence and lax due diligence for the risky lending, calling the episode a reminder that good times breed bad habits. Now, despite rising defaults, Marks insisted the system's plumbing remains sound. This is a cycle, not a contagion.
All right, so those were some of the top global stories that we are tracking this morning. But let's shift focus back home and focus on some macro data. Now, India's inflation, that continues to decline even in the month of October. Now, retail inflation for the month gone by came in at 0.25%, and September's inflation figure was revised to 1.44%. Food inflation also declined considerably from minus 2.3% to minus 5.02%. Now, remember, core inflation, that remains above the RBI's 4% inflation target, and it increased marginally to 4.4% in the month of October. In fact, we had Madan Sabnavis, who's the chief economist at Bank of Baroda, and Aditi Nair, who's the chief economist at ICRA, to discuss what the inflation print is looking like. Listen in to what they had to say.
No, I think, again, this is very much on expected lines. We also had a high base and the fact that prices have been moderating in the last couple of months. So I think that's why we're seeing good food price inflation in negative territory. We've also know that inflation for pulses has been in the negative zone. Oilseeds is only one edible oils which has been positive, but otherwise I think this is a continuation of a trend which we have seen and more or less expecting. So while this would actually mean that maybe for the entire financial year, the average inflation rate would be lower than what the RBI had projected, but I would say it's nothing much to take too much of notice of because this is more or less in the expected direction.
Absolutely. We had actually forecast inflation in this month at about 0.5%. So this has come in a little bit lower. The direction is not surprising. We knew that inflation was going to fall a lot. We knew that it was going to fall to a series low. It has come in a little bit lower than expected. And the reasons for the fall broadly are twofold. One, of course, on the food side, the base effect, the fact that this year the momentum has been very dull. And then, of course, the impact of the GST changes. This is the first full month of the GST rationalization coming into effect, and that has had an impact on the price trends in various categories. So I would say that this is possibly going to be the low for the series, and as the base effect unwinds now, we'll probably start to see numbers normalizing over the next few months.
All right, but with this, viewers, it's time now to slip into a very short break.
Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar, and Srishti Sharma. Time now to take a look at how the Asia Pacific markets have opened up this morning. And it's a rather mixed day coming in on Asia Pacific front as well. If you take a look at Shanghai, it's absolutely flat right now, trading with just a bias, with a positive bias, but just about 0.08%. On the other hand, Hong Kong's Hang Seng Index, that's trading in the red right now. Also very flattish moves over there, just about 0.17% downtick coming in on Hang Seng. If you talk about Japan's Nikkei, that's trading about 0.4% higher at that 51,261 level. So yes, those are some of the key indices. If you talk about S&P ASX 200, that's witnessing a little bit of a downtick over there. It's trading just about 0.8 nearly 1% lower right now, trading at that 8,714 mark. So yes, that's about Australia's index. Now, if we talk about South Korea's Kospi index, now the markets did open an hour late as far as South Korea's market are concerned because of a national examination that is going on, and hence the markets open late. but they've opened on a rather positive note, just about 0.2% uptick over there at that 4,160 level. Now, if we talk about Nifty, that's showing a downtrend as well. Yesterday, we did manage to end in the green, just above that 25,800 level. We hit the 25,900 mark yesterday, but were unable to sustain that level at the time of closing. And for today, we're expecting a rather muted start with a downtick of about 30 points is what the implied Nifty is suggesting. So, Srishti, yes, good moves on Nifty yesterday, but were unable to hold that 25,900 mark.
Well, yes, Kanishka, 25,900 and below is where we really should shop. But even Nifty Bank did participate in the rally that we have seen and closed with the gains of 136 odd points. But let's tell you some of the key movers yesterday. It was the Adani group of counters that were buzzing. We have seen that right issue announcement coming in, taken very positively by the markets. It's going to be a big one, but the stocks were quite excited. Other than that, the paint counters were doing very well. Case in point being Asian Paints, but sectorally it was the IT pack that was holding up quite well. Not just the large cap IT names, but along with that, all these other counters with respect to the mid and the small end of the market within the IT pack, they were also holding up well. Autos, they did extend the gain to the 5th straight session. Hero MotoCorp, Eicher Motors will be in focus today on the back of the earnings. The PSU banks were seen to be snapping their 2-session losing streak. The energy basket was seen to be gaining for the 3rd straight day, while the realty and the metal pack was seen to be declining a bit. Today, of course, all eyes will be on Tata Steel as well as Vedanta. So that was the picture of the market yesterday. A good day. The broader markets were seeing very well. In fact, the mid-cap index did hit its all-time high levels. So that was also very exciting. See. So yeah, Kanishka, decent day coming in for the markets yesterday.
Absolutely. It was a decent day and hope that momentum continues today as well. But Ashesha is here to take us through all the stocks that are going to be in focus and may drive the market higher or lower. Ashesha, over to you. Good morning. Which are the stocks that you are tracking this morning?
Good morning, and first up let's talk about Tata Steel, because that one has reported very strong set of numbers as compared to estimates. Across the board it's a beat. Revenue has inched higher by about 9% on a year-on-year basis and about 10% on a sequential basis. EBITDA too has seen a solid uptick of nearly 45% on a year-on-year basis. Net debt has risen by a marginal 3% on a sequential basis, so that could be a concern. But as far as European operations are concerned, that has reported a stable set of numbers on a quarter-on-quarter basis. Last quarter it reported a profit of $8 per ton, and that has sustained in the current quarter as well. Meanwhile, Ather Energy, that big block deal is expected to happen today, so keep an eye out on that, where 2.3% equity is likely to change hands in a block deal today. Deal is expected to be valued at about 551 crore. Floor price at about 1.4% discount as compared to yesterday's closing price. On the back of this block deal that is expected to happen today, keep an eye out on Ather Energy as well. Meanwhile, SpiceJet, that one has reported weak set of numbers yet again. Losses have expanded on a year-on-year basis, and it has reported worst top line and profit after tax in the last 13 quarters. So that's how bad SpiceJet numbers are. Consolidated loss for the quarter gone by now stands at about 221 crores versus 458 crores, or rather 621 crores versus 458 crores that the company had reported same time last year. Honasa, meanwhile, has reported strong set. It has reported profitability this quarter versus a loss same time last year. Profitability has sustained on a sequential basis. Net profit has come in at 39 crores versus a loss of about 19 crores that the company had reported same time last year. Meanwhile, IGL, Indraprastha Gas, has also reported its numbers. Volumes have been lower than what the street was working with. So the street was working with a volume growth figure of about 7%. That has come in at just 4%. And as far as margins are concerned, they too have contracted to 11% versus 13.1% that the company reported in the previous quarter. So largely mixed set of numbers is what RGL reported. A whole host of counters in focus based on either their earnings or news flow.
Well, yes, thank you so much, Ashesha, for getting us all those details. But with this, let's also tell you which are some of the other counters that we will be watching out for. And first up, KNR Constructions will be in focus today. Very weak set of numbers coming in by the company. Look at the fall in their profit. Almost a 76% decline is what we have seen. The revenue has fallen almost 70% on a YY basis. And along with that, even the margins, they have now shrunk from 44.7% same quarter last year to 29.8%. So operationally, well, the company has not done that great. So KNR Construction, let's watch out for the action over there. Even Ramakrishna Forgings did come out with the numbers. Quite a dismal set coming in because what I see is that the company has reported a loss of 9 crores versus a profit of 140 crores same quarter last year. Operationally as well, the numbers look weak. And in terms of the earnings, it's the finance cost and depreciation that has gone up, and along with that, the share of the loss of the joint venture that is also seen to be hitting the overall numbers. So not a great set coming in from Ramakrishna Forgings as well. One of the recently listed counters, that is Shringar Mangalsutra, that did come out with its earnings. The revenue has seen a jump of 27% YOY. EBITDA did grow by 34%. So it's a double-digit growth. Good set indeed. Deepak Nitride. Not a great set. The margins are now fallen from 14.6% to 10.7% right now. The revenues have seen a decline of 6.5% as well. And lastly, Cochin Shipyard. Yet again, a weak set coming in by the company. The revenue has seen a decline of just 2.2%. But look at the margins from 17.3% same quarter last year. They're now down to 6.6%. Even the profit has seen to be declining almost 43% on a YY basis. So Cochin Shipyard as well, not a great set when it comes to the Q2 numbers.
That's right. So lots of earnings candidates. We'll watch out for all of them and how the market reacts to their numbers. But, lots of cues as well that we need to keep on our radar today. And Mitali is here to take us through all of them.
Cues to watch. First up, we have all the eyes on the weekly Nifty expiry. And from the macro indicators, if we talk, so from UK markets await fresh readings on GDP and the IIP data, both crucial indicators of the economic momentum. Also from the Eurozone, IIP data will be released, providing insight into the regional manufacturing trends. Meanwhile, in Japan, investors will track the PPI data for cues on the inflation pressures. Earnings season continue with major reports expected from Disney, Tencent, Siemens and Brookfield, all of which could set the tone for global equity sentiment. No Nifty companies are scheduled to report today. However, several key mid-cap and sectoral names will be in focus, including Aether Industries, Page Industries, Samvardhan Motherson, New India Insurance, BDL, among others. IPO watch, so it's a busy day for the primary markets. Fujiyama Power System IPO opens for subscription. The IPOs of MV Photovoltaic and Physicswala closed today. Lock-in expiries, if we tap that area, the post-listing lock-in period ends for TBO Tech, with 20% of shares becoming eligible for trade. Last but not the least, we have some key events happening globally. The International Energy Agency will release its monthly oil market report, which would influence the crude price and the energy stocks globally.
All right, thank you so much, Mitali, for all those details. But time for big stories that we are tracking, and just yesterday it was the cabinet that approved the credit guarantee scheme for exporters. Now, the cabinet approved 20,000 crores additional credit support for eligible exporters, including MSMEs. Let's listen into what Minister Ashwini Vaishnav said at the briefing about the Delhi blast, along with the trade and scheme of exports.
The country has witnessed a heinous terror incident perpetrated by anti-national forces through a car explosion near the Red Fort on the evening of 10th November 2025. The explosion resulted in multiple fatalities and caused injuries to several others. The cabinet pays its solemn respects to the victims of this senseless act of violence and conveys its heartfelt condolences to the bereaved families. The cabinet prays for the speedy recovery of all those injured and appreciates the prompt efforts of the medical personnel and emergency responders who have been providing care and support to the victims. The cabinet unequivocally condemns this dastardly and cowardly act that has led to the loss of innocent lives. प्रमोशन मिशन लॉन्च किया गया है 25,060 करोड़ रुपीस का। बहुत ही कॉम्प्रिहेंसिव मिशन है, इसकी डिटेल में मैं जाऊंगा। दूसरा, क्रेडिट गारंटी स्कीम एक्सपोर्टर्स के लिए। आज की जो परिस्थितियां हैं उन परिस्थितियों में क्रेडिटर्स हमारे एक्सपोर्टर्स को कैसे सपोर्ट करें, उसके लिए क्रेडिट गारंटी स्कीम 20,000 करोड़ रुपीस की आज अप्रूव हुई है कैबिनेट में माननीय प्रधानमंत्री जी के नेतृत्व में। एक्सपेंशन ऑफ क्रेडिट गारंटी स्कीम फॉर द एक्सपोर्टर्स। जिस तरह का आज ग्लोबल एनवायरनमेंट है, जियो इकोनॉमिक एनवायरनमेंट है, जिसमें कुछ देश अपनी पॉलिसीज के कारण बाकी देशों पे तकलीफ ला रहे हैं, तो उन सब तकलीफों से हमारे एक्सपोर्टर्स को कैसे हम प्रोटेक्शन दे सकें, वो इस स्कीम में 20,000 करोड़ रुपीस की इस स्कीम में है। ये है एडिशनल क्रेडिट सपोर्ट फॉर एक्सपोर्टर्स एंड स्पेशली दी MSMEs.
All right, so those are the latest comments that we're tracking from Minister Ashwini Vaishnav. But moving on, we'll focus on Vedanta as well today, as the NCLT has concluded its hearing on Vedanta's demerger and the court has reserved its judgment on the matter. My colleague Anurag Joshi is here with all the details of the NCLT matter.
The National Company Law Tribunal has reserved its ruling on the Vedanta demerger proposal. A NCLT judge in Mumbai on Wednesday said that there are no objections to the Vedanta demerger and the matter is reserved for order. The judge made these observations after hearing the submission by the Oil Ministry's lawyer, who raised certain objections and said that Vedanta had not made full disclosure of its liabilities in the financial statements, and also that it had not disclosed the Government of India's share of awards under arbitration of the energy assets which are under its Vedanta's unit Malco Energy. Now to give you a roundup of recent developments, just last month SEBI had in its affidavit before the NCLT had mentioned its approval to the demerger with certain conditions. And prior to that, the Oil Ministry had also raised concern about the financial risk from the demerger. On September 11, Vedanta and unit Talwandi Sabo had reached a settlement with China's power infra company SEPCO over settlement of dues owed to that company. In September 2023, Vedanta had earlier proposed the demerging of its business into 6 listed units, and the rationale the company had given was that the demerger plan was focused on unlocking of shareholder value.
All right, thank you so much for getting us all those details. Now, SEBI's high-level panel has proposed revamping the conflict of interest and disclosure norms. My colleague Ankur Mishra joins in with more details. Ankur.
Yes, the high-level committee which was given the task of reviewing the conflict of interest has now submitted the report, and in that it has made an observation that the current laws are inadequate and there should be legally enforceable law which should be brought by SEBI. Now, what are the recommendations which has been done by the panel? The panel has recommended that both chairman as well as the WTMs should be brought inside the definition of insider under the Prohibition of Insider Trading Regulation of 2015. Now, this is first time which it has been recommended like that. Now, as per the recommendations, SEBI board members and employees should make initial, annual, event-based and exit disclosures of assets as well as liabilities. Now, this is something which has been recommended that this should be made public even at the end of the year where the annual report is there. All these details should be there. The applicants for the position of SEBI chairman as well as members and other lateral roles must disclose actual or potential or perceived conflict of interest. Now, that disclosure should be given properly, and that is what the panel has recommended. The panel has also recommended that chairman, WTM, SEBI employees at the level of CGM and above are required to publicly disclose assets as well as liabilities. Now interestingly, there is one more recommendation which has been done for chairman as well as WTMs by the panel. Now the 4 options of the current holding has been given upon joining. So there are 4 options. 1, liquidate your investment, freeze your investment, sell under a pre-approved trading plan, or sell without a plan but with a prior approval. So all these recommendations have now been given to SEBI. Now it will all depend on the market regulator whether or not these are actionable.
Thank you, Ankur, for taking us through the latest on SEBI reforms. But moving on, at the upcoming CII Partnership Summit in Vizag, it is expected that 400 MOUs will be unveiled worth nearly 9.8 lakh crore rupees, promising to create about 7.5 lakh jobs. Sumita caught up with Nara Lokesh, who's the state's IT minister, on the investments and more that are being done in Andhra Pradesh. Let's take a look.
Companies that choose speed are choosing Andhra Pradesh because speed of doing business is our hallmark, and that's our clear competitive advantage when I go pitch Andhra Pradesh to other companies. So if you look at it, that's why we've been able to land marquee investments across sectors, diverse sectors, and that's what again makes Andhra Pradesh very unique.
But you also spoke about attracting $1 trillion worth of investment. Have you given your team a timeline to sort of achieve that? And what are the key sectors in terms of investments that you're looking at for the state, especially when we look at the India story and the kind of policies that the central government is rolling out?
If you look at it, our clear target is 5 years. We have to attract a firm commitment of $1 trillion. That will enable us to get to being a $2.4 trillion economy. Parallelly, if you look at it, energy is a very important sector. Steel, electronics manufacturing, of course, IT, data is another big sector. Medical devices manufacturing, pharma, automotive, cement. So from traditional sectors all the way up to cutting-edge sectors, every sector is a play for us. And across sectors, we have built strong clusters where we have vertical and horizontal integration, where education plays a very, very important role.
Let's also talk about the kind of investments that you're looking at coming from India's neighborhood. You also mentioned during your presentation that, there will be representation from several different countries. Diplomats are expected. The Honorable Commerce and Industry Minister Piyush Goyal is expected. But what is your sense of the kind of investments that we can expect from India's neighborhood, given the fact that our ties with countries like China have normalized in the past couple of months?
I think it just started. A lot more will happen. Conversations have just restarted. So I believe that we are in the right direction.
Right, moving on to another story then. And days after the blast in the car near the Red Fort in Delhi that killed 13 people and included several people, Prime Minister Narendra Modi chaired the Cabinet Committee on Security CCS meeting, wherein Home Minister Amit Shah, Defence Minister Rajnath Singh and NSA Ajit Doval were present in the meeting. Prime Minister Narendra Modi also visited the LNJP hospital yesterday and met the survivors of the Red Fort blast, saying the perpetrators will be brought to justice. My colleague Prakash joined in with more details. Prakash.
Well, the Prime Minister has chaired the meeting of Cabinet Committee on Security, which is very crucial in the wake of bomb blast in Red Fort area. In fact, he was briefed by the Home Minister about the current security arrangements situation and, of course, steps taken so far. In fact, the Prime Minister did take stock of the current security situation across the country, especially in states on high alerts. The Prime Minister has made it very clear that the culprits would not be spared at any cost. In fact, the Union Cabinet has passed a resolution to condemn this heinous crime in best possible manner. And most importantly, the government has declared this bomb blast as a heinous terrorist attack, a very significant development coming in. In fact, all ministries and departments have been instructed to take all possible steps to ensure safety and security of citizens. In fact, all possible steps would be taken to bring these culprits and perpetrators to the justice. Along with that, all necessary support and government support would be provided to the victims and injured to get faster recovery. This is something which is very crucial at this point of time, and the government has reiterated its resolve to protect country from any sort of conspiracy, and safety and security will be ensured by taking all possible steps.
All right, so that's the latest that we are picking up on the Delhi blast. We'll keep getting you more updates. But moving on, the Finance Minister's pre-budget meeting with MSME sector representatives was held in the capital yesterday. And the MSME industry has urged the government to promote manufacturing amid tariff-related disruptions. Prakash filed this report earlier. Let's take a look at the report.
Well, the Finance Minister has interacted with the MSME's representatives in connection with the pre-budget consultations for Union Budget 2026-27, which have been underway for quite some time. In fact, industry has urged the government to promote domestic manufacturing amid tariff-related disruptions. Relaxations have also been sought in taxation and compliance-related issues to promote domestic manufacturing. Along with that, it has requested to arrange financing through alternative mechanisms and provide focus on trade facilitation to maintain global competitiveness. Along with that, MSMEs sought relief from quality control orders in employment-generating sectors. They have also requested to include MSMEs and SME sector under PLI schemes. A very significant development. In fact, exporters have called for schemes to enable easier access to financing. These are the wish list which have been presented before the Finance Minister in a series of pre-budget consultations which have been underway for quite some time, and we can expect some of these recommendations could reflect in the Union Budget 2026-27.
All right, thank you so much for getting us all those details. But government is looking to expand the scope of motor insurance coverage. And ET now learns that the Road Transport Ministry is proposing to include the vehicle owners and drivers under the ambit of the third-party insurance, a move that could significantly alter the claim liabilities. Anurag Shah joins in with more details.
Major development related to motor third-party insurance coverage, as the Road Transport and Highway Ministry has proposed amendment to Section 145, 146 and 147 of Motor Vehicle Act. MORTH has proposed to change the definition of third party, and proposal is to include owner driver also part of third party. But insurance companies are opposing this proposal, saying their loss ratios will increase, and Motor Vehicle Act understanding will completely change, and the Motor Vehicle Act will get distorted with this proposal. So trigger for this proposal of MORTH is after the Supreme Court judgment in Wakia Afreen versus National Insurance case, where Supreme Court has referred this case for the larger issue, which will be taken up by the larger bench to settle insurers' liability in owner-driver death cases. So that will be decided by the larger bench of Supreme Court. But if this get implemented, means the owner-driver get to be part of the third-party liability, then third-party insurance coverage will completely change, and insurance companies are opposing this proposal of Ministry of Road Transport and Highways.
All right, thank you, Anurag, for getting us those details. But on that note, the earnings candidates, now Asian Paints came out with its numbers yesterday, and it was a beat across all fronts. Very solid set of numbers coming in. But what are brokerages making of it? Mithali is here to take us through all of that. Mithali, over to you.
Yeah, so we had 3 brokerages on Asian Paints, and 3 of them stand underweight, but have also increased their target price. So let's have a look one by one. So Morgan Stanley has lifted its target to 2,194 rupees, but stays underweight. The brokerage increases its bull, base and bear case values by 4% and shifts the scenario probabilities to 30% bull, 50% base and 20% bear, citing the stronger than expected quarterly performance. Other assumptions remain changed for the brokerage, while both Citi and Goldman Sachs also maintain a sell rating on Asian Paints, even as they raise their target price to 2,250 and 2,500 rupees respectively. The brokerages highlight that the Q2 performance was strong, revenue up by 6% year-on-year basis, and EBITDA was 21% up, supported by a low base, early festive demand and softer input cost. Volume growth came in at around 11%, though the extended monsoon capped the upside. Despite the beat, now both the firms still remain cautious. They flag the challenges in the sustaining double-digit volume growth in the second half as the base normalizes, and expects Asian Paints to deliver only mid-single-digit revenue growth going forward. Margins, they say, should stay in the range of 18 to 20%, even with rising competition. Goldman and Citi have also nudged up the earnings estimates by 5 to 6% and 3 to 5% respectively on the back of improved gross margins.
So much, Mithali, for all those details. So that was about Asian Paints, one of the star performers of yesterday. But for today, all eyes will be on Hero MotoCorp on the back of the upcoming numbers. And this time, what a jump that we have seen in coming in terms of the volumes, given that Hero MotoCorp is the leader. And on that base, it has seen a jump of 11% in their overall volumes on a YY basis, while sequentially it's been a 24% growth. Now, along with that, it was the EV mix that has seen to be contributing higher at around 2.3% in the overall sales, and so was the exports, where the mix has improved in this particular manner. And all these factors will play the role in the consolidated financials as well. So let's tell you what are we expecting on that front. The revenue is expected at 11,949 crores. That will be a jump of 14%, but 18% growth in terms of the EBITDA is what we are expecting. The margins are expected to improve, and 15% is what we are expecting on the margin front, and that is the number that will be the key to watch out for. And lastly, on the profit figure, 1,424 crores is our expectation on the bottom line. So yes, good set expected from Hero MotoCorp, and along with that was the management commentary with respect to the upcoming and the new launches. And post the GST announcement, how are they seeing the industry shifts in the making, and what's the outlook going ahead is something that we will be tracking closely.
All right, so all eyes on Hero Moto then. Let's watch out for their earnings. But Tata Steel, they reported a very solid set for the second quarter of this fiscal, coming in much ahead of the street estimates. And Ashesha is here to take us through all the details, the fine print, and what brokerages are making of it.
Well, yes, it's a beat across the board for Tata Steel this time. Revenue has seen an uptick of nearly 9 to 10% both on a sequential and on a year-on-year basis. Margins were expected at about 15.1%. That too has come in well ahead of what the street was working with. Remember, European operations has reported stable profitability. It reported a profit of $8 per ton in the previous quarter, so that continues to remain stable. On a year-on-year basis, Europe reported a loss same time around last year. So clearly, European operations has reported stable set of numbers. As far as India operations is concerned, remember, realizations had declined on account of seasonal weakness led by monsoon. So that continued to weigh heavy, but despite that, deliveries that the company had reported earlier stood at about 20% growth on a quarter-on-quarter basis. So India operation resilience continues. Net debt, meanwhile, has risen marginally by about 3% on a sequential basis, so that could be a bit of a concern. Meanwhile, we have a report that has come in from Morgan Stanley, where they are reiterating their overweight stance on the stock with a target price of 200. They also believe that earnings were ahead of what they were penciling in. They continue to remain positive on execution of cost savings and margin recovery, and they are reiterating their overweight stance on the stock. So yes, across the board it's a beat across all parameters. Net debt has risen, that could be a concern, but European operations continue to remain stable.
All right, thank you so much, Ashesha, for getting us all those details. So Tata Steel, the key to watch out for in today's trading session, good set versus the estimate is what we are getting to see. But with this, let's also tell you what is the street penciling in with respect to the Eicher Motor earnings now. Wherein firstly, let's help you with the volume picture, when the Royal Enfield volumes have been very strong. It's a 43% jump on a YY basis, and along with that, they have definitely outpaced the industry growth as well. Because in the quarter gone by, we have seen that whole GST news kicking in with respect to the taxes going higher for Eicher Motors. There was a lot of pre-buying that happened, but the key to note was that despite that, during the festive season as well, once the new rates were implemented, there was no significant fall in the sales for Eicher Motors Royal Enfield. So going strong on that particular front. When it comes to the VECV volumes, they were not impressive, and even the industry volumes were not impressive rather, but the operational performance of VECV is expected to improve, and 8.7% is what we are expecting on the margin front. Now let's tell you the consolidated picture, including both these divisions. On that front, we are expecting a revenue of 6,091 crores. That will be a jump of 43% on a YY basis. EBITDA is expected to show a similar sort of a growth, while the margins are expected to expand to 25% versus 24% in Q1 of FY26. And lastly, on the profit figure, 1423 crores is what we are expecting on that particular number. So yes, Eicher Motors, good set expected, but all eyes will be on the upcoming launches that are planned for Eicher Motors, the kind of industry growth that they are seeing. And off late, the company has been working a lot with respect to their export division. And along with that, the EV bike, the excitement around that is something that we will be watching out for. Where's the progress and what are the plans to launch the EV bike in Indian markets is something that we will be closely tracking when it comes to the Eicher Motors numbers. But do remember the stock that is the stock is already very close to its all-time high levels, is now very, very close to that 7,000 odd mark. So we will be watching out for that, how much of this is already baked in, and along with that, with respect to the margins, that will be the key to watch out for. Tell you 25% is what we are expecting. Royal Enfield margins expected at 26.7 odd percent.
That's right. So very strong set of numbers is what we are expecting from Eicher Motors. But Honasa Consumer, the parent of Mama, they've also delivered a very strong set with profit and margin beats, while revenue came pretty much in line with the estimates. Now, EBITDA, that turned positive at 48 crore rupees with margins improving to 8.8% level. Volume growth also accelerated. Core categories and modern trade grew double digit. In fact, brokerages, however, are staying mixed. Mithali is here to take us through the highlights of the numbers. Mithali, over to you.
Right, so we had revenue in line mostly for Honasa Consumers. PAT and EBITDA margins almost beat the estimates. Consolidated year-on-year basis, if you see the numbers, the revenue was up 17%, while the net profit stood at around 39.2 crores versus the net loss of around 19 crores in the previous year last quarter. EBITDA also stood at 48 crores versus the EBITDA loss of 31 crore in the previous year same quarter. EBITDA margin stood at around 8.8%. Have the brokerages which have given a stance on the Honasa Consumer. We have Goldman Sachs, which remains neutral and have increased the target price of 315 versus their earlier estimated target price of 305 rupees. It says that the FY26 EPS estimates have been increased by 9% on stronger margins, while for FY27 and 28 estimates remain largely unchanged, and brokerage remains neutral, citing limited upside despite steady performance. We also have Citi on Honasa Consumer, which maintains a sell rating with a target price of rupees 240, which remains unchanged. The quarterly growth driven off because of a low base, and recovery sustainability remains a key concern as cited by the brokerage. They also have mentioned that the growth momentum slowed down to 4% on a 2-year CAGR basis versus 13% in Q1, and Mama Earth brand returned to growth with double-digit performance across the channel. Still, Citi remains cautious and awaits sustained improvement before turning constructive.
All right, thank you so much, Mithali, for getting us all those details. But with this, viewers, we are completely timed out in this edition of Market Cafe. It's a goodbye from me and Kanishka and the entire team. But before we let you go,